Gil, welcome. Good morning. Why do you like it so much?
It's a very unique combination of size, growth, and profitability. There's very few companies like this. In fact, I'd say the only company that has the same characteristics is Facebook. So there was a lot of demand for a company that can grow this fast and is very profitable and has a long runway. That's why the IPO went so well.
How do you account for the China factor and the risk that you're taking on with the Chinese government?
I think China is the risk and the reward. The risk being the unique governance structure that was forced upon Alibaba, the risk that they regulate Alipay in a more restrictive manner, regulate Alibaba as a monopoly. But it's also the reward. The entire growth of Alibaba is driven by the growth of the Chinese consumer, the growth of the Chinese middle class. And so that's the trade-off you have to make here.
Where do you see this stock going?
I think it should continue to do well. Right now it's in the middle of the valuation range between Baidu and Tencent at the low end, Facebook at the high end. It should do well. I would expect there, though, to be the stock to be vetted over the next few weeks. I'd expect some bad news to come out, some people to challenge the volume numbers, to challenge the business practices. A lot of things are going to come out, but at the end of the day, the growth is what's going to matter, and that still seems to be on a 30% plus trajectory.
Yeah, it's got tremendous growth, and it also has tremendous margins, which in some ways separates it from some other e-commerce companies out there which just don't have such lucrative margins, Amazon being one. If you had to take a pick between Amazon and Alibaba, is Alibaba going to win out for you, Gil?
It seems like Alibaba is superior to Amazon in almost every way. It's growing faster, it has a longer runway, and as you point out, it has the much more profitable business model. The only other company with this type of profitability in e-commerce is eBay. They're not growing nearly as fast, but Alibaba is faster and more profitable than Amazon, so it appears to be superior to Amazon in every way.
I guess the big question, though, is can Jack Ma and the company keep up these kinds of margins as we move forward? Isn't there going to be some competition that makes it harder for them to have such lucrative margins going forward?
Competition is already quite intense in China, but the marketplace business model, the one that Alibaba and eBay share, is what makes it so profitable. eBay's actually been able to sustain very high margins. In its marketplace business, it has 40% margins. It's been able to sustain those in the face of competition. It just doesn't have as much growth because it's based more in the US and Western countries. Alibaba has this very profitable marketplace model. It's just growing in China, which again is already a very competitive market. So I think it can sustain very high margins, maybe not quite as high as they reported last year, but certainly over 50%.
Now that Alibaba has all this money, what do you expect they'll do with it? What kind of acquisitions might be in their future?
At the very least, they've been expanding their ecosystem in China, adding things like mobile capabilities, content, things like that. But now they have substantial capital, not just the $15 billion of cash, but also very good ability to purchase with their share capital. And I'd look for them to make possibly bigger acquisitions outside of China in order to capitalize on this ability, perhaps even in the U.S. or the West.
Any names before we go to break?
If they wanted to expand their business very quickly to U.S. and Europe, it would be very possible and easy for them to buy eBay's marketplace business at this point.
All right. We'll watch for all of it. Thank you so much. Good to have you here this morning. Luria, tech analyst at Wedbush Securities.